But I'm going to get short as soon as this closes here in 10 seconds. Might be a loser. I got 5 contracts queued up. Okay, so here we are with Wednesday's video, August 5th. So first I want to say I really appreciate when you guys comment on my videos. I love to hear what you have to say and what you're thinking. I love the engagement. It definitely makes me think as well. I'm always a fan of like listening to people because it gives you an opportunity to learn something or to be able to teach something. So I got a comment here from Dar 2B M87 or M8Z, it looks like. So I'm sorry if I said that wrong. But it says, have you thought about upping your risk on eval? Maybe risking 25% of your DD per trade, either you pass or not. Spending so much time on eval can tax your mental capital, and by the time you get to the funded, it feels like such a journey, you're barely able to follow the rules. Just putting it out there, if that's not your cup of tea, that's fair. So here's the thing on that. It's a very accurate statement because like what this is a reference to is I spent last month on an eval, the entire month, and I decided to just casino trade it on the last day because I was getting rebuild, and then blew it out, got rebuild, and started over. And yeah, when you spend that much time, on an evaluation account, it does, tax your mental capital big time. It can actually create some negative psychological effects when it comes to trading as well. It's one thing if it's your funded account, you're just slowly growing it, totally different mental game than when you're just trying to pass something and you're struggling to pass it. So, and then, at the end I did casino trade it, and it is hard to follow your rules when you're not making the progress you think you're going to be making on your strategy for, weeks or even months. Then you start to not trust what you're trading. You start to second guess, start not trusting, you start casino trading, looking for confirmation bias. All kind of things can creep into your trading when you start to lose trust in the thing that you're doing. And the easiest ways to lose trust is for it not to be performing the way you expected it to perform. So I did not expect to be in an eval for a month. That was I did not expect that at all. There's a lot of accuracy there. But let me show you why I risk what I risk per my trades in the evaluation account, and I don't risk more than that. Let me show you why. Okay, so this is a tool that I like to use for building my trade plan and my strategies, tracking my strategies, and managing my trading. It's called the My Strategy Manager, and you can get it in the links in the description below. It also has this really nice calculator right here. I'll show you real quick. So you can click what symbol it is that you're trading, how many, what the risk is. Say it's a 10-point move with 5 contracts. I'm risking $1,000. It shows me what the leverage is in the futures market and stuff like that. So there's a couple different ways to calculate the futures market there, and then there's also stock calculators and all that kind of stuff in here too. Custom designed for trading. Really helpful. All right, let's go back to this. So here I am with my back test blocks. So I put in my rules. I can put in my overall trading rules up top if I want to. All kind of different stuff I can do with this. But what I'll do is I'll get my back test, or maybe I'm even sim trading this for a while and I'm getting some actual data, and I'm paying attention. Remember, there's a spread to get in and to get out, so there's a cost there. Then there's commission. So you might not actually make, if you think you're making risk 1 to make 2, you might only be making risk 1 to make 1. Or you might be making less than that. If you have to take into account the spread and the commissions when you're looking to see what your actual risk reward is. So going down on this this little back test here over 30 days, I can see how many red days that I have in a row. So if this is just taking 1 trade a day. If I was taking all these trades in 1 day, then I could say this is how many trades I have in a row in 1 day. But I need to see what do I need to account for. So it looks like the most trades I have in a row are 3. But then I also need to have room for drawdown on day 4. So in a sense, I have to account for 4 losing trades if I'm just taking 1 trade a day. So with the calculator over here, when you start the 150K evaluation or 150K combine in Topstep, I can lose $4,500 before I blow up the account. So I have 3 red days that are possible, or that have shown up in the past. I guess 10 red days are possible, but 3 in a row that have shown up in the past. Plus this one more day that I got to be able to have room for drawdown, so 4. So divided by 4. So the most I could risk is $1,000 or $1,100 basically in a trade. But then I'm going to need a little bit of room just in case I have a bad entry, some slippage or what. There's not really much slippage in an evaluation account if you're doing it through a prop firm, which is great. But there's still order entry mistakes, getting in late, little things like that. So I would just round this down to $1,000. And I'll risk $1,000, which is what I'm doing right now in this current strategy, provided that I take the time to mark up my trade before I get into it, use my trade calculator to make sure I know what the contract size is I'm supposed to get into. Let me put this back to ES before I forget tomorrow. And then I get the right position sizing. Then I should be able to be risking $1,000. And that's the best that I can do in the evaluation. Now, I could do that when I get to my funded level, but the one time I have 4 days in a row, I'm going to be in trouble. So I'll have to reevaluate that after I've passed this evaluation, because that'll add more data to this. So once I get the back test results, then I start a new line down here for when I start trading the thing. So I had a trade today. It was a winner. So I put that little winner in there. I could put the date in there, 8/4 or yesterday. And then I can know when the last day was that I traded. So, and then I can track this, and what I do is I take this number here is 50 and 9 and bring it down to this. So now down here I can track and see what are my results. Are they getting better or are they getting worse than what I had up here? So that kind of helps me trend whether or not my strategy is still working, or if I need to hit pause on it and possibly get a different strategy because it's starting to fail. And as long as I track it, I can catch that failure before it actually messes up my account. The other thing I can do right here is see with these results if I'm risking $1,000 per trade, because I can only use $4,500 for my evaluation. I should be able to make $41,000 in 30 days. So then I can go ahead and say, well, if I can make $41,000 in 30 days divided by 30, that gives me $1,300 a day on average, $1,366. There's 20 trading days in a month, so then I can do 20, and I'm making $27,000 in a month. So $27,000 in a month, and I only need to make $9,000 to pass this thing. So that's pretty awesome. I should be able to do that conservatively, skipping some days, etc. All that kind of stuff. Maybe I missed some trades, whatever. Within 2 weeks, I should be able to do that and pass. Maybe even within a week if the market's hot for me that week, which is pretty sweet. So that kind of gives me a gauge of when I think I might be able to pass my evaluations and give me some expectations. Again, markets change, so I have to be flexible. And then once I'm in a funded account, the most I can risk with Topstep, because if I'm risking 1 to make 1, all the different stuff, all these different equations could change. If I'm risking 2 to make 1, whatever. But with what I'm doing, the most I'm going to be able to risk with them is $3,500. That's the DLL that's going to be automatically given to me when I'm on a funded account. So, which is fine. I only have to account for 1 trade a day. So now if I'm accounting for, if I said I have to take 3 trades a day, I got to leave room for 3 trades a day, then I would have to divide that max loss up by 3 so that I can account for it. But only taking 1 trade a day as the primary, I can risk my entire max loss on that 1 trade. And if it's a winner and I want to take a secondary trade, then I can take a secondary trade. But at least the way I'm trading. So with $3,500 max loss, I'll risk that whole thing, risking 1 to make 2 to 3 on these trades. I should be able to bring home $143,000 every 30 days. And then I ask myself, is that enough money? Because if it's not, I'm going to casino trade because I'm going to want more. But if that is enough money, then I'm good. If it's not, I need to go back to the strategy and figure it out. How do I get more out of what I'm doing? Or do I need to change my strategy, trade frequency? Like what do I got to do to up that number? But that's way more than enough for me. So this works. Now we just got to prove that it works by doing it. And that's what we're doing right now. We got 1 day in the books, green day. I kind of screwed the day up because I didn't do proper position sizing. I didn't check my risk before the trade. I didn't have my glasses. I couldn't see. Like, it was a mess. So I just got one contract, saw that I can add one more. I should have had 5. But I went conservative because I wasn't sure. And I knew one would be fine. But, unfortunately, that ended up giving me a $500 day. Actually, instead of the $2,000 day that I should have had. But it is what it is. I just hope that today is going to be a green day and I didn't skip the winner to take the loser kind of thing, which is a trend for me. But anyway, I hope that answers your question and gives the rest of you something to think about when you're looking at what you're risking and why you're risking it. The way I determine that is what does the backtesting show, or what is my trading showed me over the last 30 days, 90 days, whatever it is. Like, what do I have to account for that, and then I know I'm good. And then in a future video, we'll talk about scaling up and scaling down as the second part of risk management. But I just wanted to address that question. And again, thanks for that comment. Anybody wants to put comments in here, I really appreciate it. I'd love to see them. And hopefully today's a green day. All right, everybody, we'll see what happens. I got a short trade setting up here. It's making me nervous. It's a really big candle. But I'm going to get short as soon as this closes here in 10 seconds. Might be a loser. I got 5 contracts queued up. All right, 4, 3, 2, 1, boom.
Order
short.
filled.
Stop is at 8:11.
Order filled.
All right, out of that trade. That was a quick one. Loser for the day. Loser for the day. All right, got one in. I was expecting it. I've had a bunch of winners in the lineup, so loser was coming and just got it. All right, I guess I'll say bye in the next trade. Okay, I got $50 left in the hopper for a casino trade if I want it. And I'm going to go ahead and take it long. Let this retrace a little bit. Stop by 1. Let it retrace and come back up like it might be doing right now.
Order filled.
Okay, in long, 1 contract. Not trying to make a bunch of money, but whatever I can reduce from earlier would be great. And then this is based on a switch, not just a casino trade. See if it'll come up to make a new high.
Order filled.
All right. DLL, which is my personal DLL, so all good. So I'll dismiss that. So hoping to get lucky and have this thing boost up here for test a new high. But it looks like we're going to be in consolidation maybe for a little while. All right, let's go look at the performance stats. So now it says total P&L down $555, which is not true. It's deceiving. That should say $1,000. Because if the account was up 500 and you have your max loss trailing with you, and I'm down 1,000 today, then this is going to be down 1,000, not 500. So deceiving. But here we are with the stats. This is typically how I start most things, down in the red. And then we recover from there. So had I traded yesterday properly, I would have had 2,000 for yesterday. We'd be down 1,000 today. And, good to go. But still red, right? Either way, it'd be red, the same amount. Because I don't get a buffer until I'm up above 4,500. Whether yesterday was a $2,000 day or a $500 day, today is the same situation. All right, we'll hit it again tomorrow.